Welcome back to Chasing Financial Freedom. Today, we are very excited to be talking about our favorite stock, Tesla. So, we all know that Tesla has done a great leap in the past year. You can see right here, we went from $114 to pre-split, post-split, of course, to $900. And now we are pivoting. We are here between, if you look here, we are here between 600 and 500 something and so on. So we're moving up and down, and actually if you look up here, you can see that the stock market is actually moving up. The S&P, the Dow, the Nasdaq, and so on are all moving up, but Tesla is still not making any good move so far. And why is that? Why do we believe so? So the first reason that we think that Tesla is not moving up is because we had an EV market crash. So all the EVs went down. We had Tesla crashing from 900 to, you can see it here. This right here, if you look here, is market crash. And as you can see, we went down, but we are getting back in the game, as you can see here. So moving in the future, we can look at the chart, and if we take a look on the 1-day chart and make trend lines, you can see here that we are actually moving up. Here we have broken the trend line. We went a little bit down and then back again up. Here we have some shadow candles, and these shadow candles actually means that we had a big drop that day, but now we are rebounding, and there has been a great rebound. So we went from 539 to 716 in just a small matter of days. This is how Tesla stock moves. It's very volatile, so it's not for everybody, but we do believe here at Chasing Financial Freedom, we do believe that Tesla has a great future ahead of itself, and we do believe that we're going to see Tesla in 1 year time in around $1,500 per share. We do believe that at the end of this year, we're going to see Tesla at around 900 to 950. So we believe that we're going to pass that record high of $900. So keep in mind that this stock to be moved, because we have a big float. If you see here, 761 million of shares, and we have actually 1 billion shares. So some people are skeptical about the valuation of Tesla of 600 billions, but if you take it and compare it to other big names such as Facebook, Amazon, and so on, it's not that expensive in our opinion. It is true that the PA ratio is big and the EPS is indeed big, but we still believe that we're going to see some great results at the end of the year. We have some great news coming. We have the new factory coming, so this is great news. We have seen a record in deliveries, but here you can see that we missed an earning, and you have to remember that this stock is mainly moved by the stock money makers and the market makers, so it has to comply with all of their standard procedures. So when this stock when Tesla stock were beating the market, we went up, and now that we have missed the estimate target, we went down. So it's just about the street politics, and we wouldn't worry about that as much. So this is as much as of the technical analysis for the stock. Technically looking, if you look at the stock market, we are in the uptrend, and if you put actually here, we have broken the trend line back up. So it should move up. And we have actually some good news. And let's see how Elon Musk responded to competitors NIO's 100,000 vehicle milestone. So NIO achieved their production milestone last week, and we have seen that even though we had this big accomplishment, we did not see that reflected in the stock. Why is that? We do believe that the stock market, the money makers are actually accumulating NIO, so they will be able to sell it later at a higher price. So what happened? EV pioneer Tesla CEO Elon Musk has acknowledged NIO's landmark production milestone of rolling out its 100,000th vehicle of its production line. In a tweet, Musk congratulated NIO and also went on to say it was indeed a tough milestone. Musk's words should come as a surprise, as both Tesla and NIO are pitched against each other in the hot Chinese market. But you do have to keep in mind that the Chinese stock market is planned to grow from 3% EVs to 25%. And usually when the Chinese government says that they're going to do, they usually achieve that goal, because that's just the way they work there, we guess. So Musk had not shied away from taking digs at NIOs in the past. In November, when NIO share rose past the psychological resistance point of 14, Musk brushed it off, saying 420 is 10 times better than 42, in a reference to his company's shares, which were about 10 times more than NIO. So why it matters? The global EV market potential is big enough to support multiple players, so multi-layer, according to sell-side analysts. Domestically in China, NIO's vehicles are pitched to a different price segment from Tesla. The average selling price of a NIO vehicle is currently $65,000, positioning it well into the premium segment. NIO's chairman and CEO William Li suggested that the company commands 50% of the high-end Chinese EV market, defined as EVs priced over $350. Meanwhile, Tesla is pushing its cost-competitive Made in China Model 3 sedan and the recently launched Made in China Model Y vehicles in China. So NIO shares closed price session down 1.5% to $38, and Tesla ended down 0.29% to 677. So this is good news. Technically, Tesla is positioned for big growth. You can see here, if you look from a technical standpoint, you can see here that Tesla stock is moving now into this tunnel right here, and if nothing big happens, we do believe that the stock is going to move a little bit like that, and then after a big news, we're going to see a big spike yet again, and then we're going to see a little bit of downfall and then back again, because Tesla stock is, if everything goes as it's going, if it's going right now, we're bound to see success in its disruption. We have analysts saying strong buys, buy, hold, underperform, and sell. So looking from this standpoint, it's all good. So market watch. Let's see what's going on. So he began buying Tesla at just 7.7. Now he's retiring at 39 years old with 12 million worth. He still refuses to sell a single share. So don't try this at home, kids. While most financial planners exposure to diversify mantra, particularly as the bull market pushes further into uncharted territory, Jason DeBolt, former Google and current Amazon employee, took a decidedly different approach. Like other outspoken Tesla analysts before him, DeBolt took to social media recently to celebrate his massive Tesla windfall. Went viral. So account 6 of 6, he has almost 12 millions. It's a great achievement. While Tesla buzz cheered, others, more conservative types, Vincent Benharzo, portfolio manager at Eastwood Wealth Manager, acknowledged feeling pang of jealousy when he comes across story like the bonds, but the approach just isn't for him, nor should it be for most. I will never put my life saving into a single investment that could go to the moon, he wrote in a well common sense blog post. But being a diversified investor means I will never put my family in the position of being completely wiped out by a single position. The boy, however, is 39 old, doesn't have a wife or kids, and is more than willing to ride the ups and downs. He's already been through plenty with his Tesla stake. He lost 1.3 million on paper in one day last year, and he doesn't appear to be sweating potential dramas in the future. Ramp Capital, a popular anonymous financial blogger, found his story captivating because of the bold's grit and determination to buy and hold through thick and thin, while having faith in a single company and godlike CEO at the face of all odds. So, Ramp reached out and asked the board if he was concerned that Tesla is in a bubble after its nosebleed rally the past year or more. No, I don't think so. The energy and transportation sectors are being disrupted, and Tesla stock price reflects that, the board explained. I think we could eventually see 20,000 to 30,000 per share by to 2030 if they can execute, assuming no more stock splits. He said he currently owns 14,850 Tesla shares at an average cost basis of 58 each. His first purchase was 2,500 shares at 7.15 in 2013. That batch is now worth about 2.2 million, he said. His company is just getting started about the ramp. We might not see a company like Tesla in the next 50 years. And concluding this day, we do agree with the board, but tell us in the comments below what do you think. And if you like this video, please push the like button so we can grow as a channel and give more value to all you good folks here on YouTube. So till next time, have faith in Tesla stock and in the stock market that we're going to go higher. So bye bye.